Good evening, Ken at Tortoise Capital. We're with the review of the daily trading plan for September 3rd, 2019. We had a gap down and then a stable hold right here in the middle of the dragon, right in the middle of the 10-day and the 30-day trading range. So we maintained the slight upward bias of the last 20 days. It has failed to fail further after this harsh drop from the all-time high. And there have been a series of rising lows. The 30 has still rolled over and moved up, so we're very close to an owl entry. We're still in the in the spring. And today's lack of volatility suggests lack of panic, in my view. So this is a market that is poised in a critical state, ready for a sharp move in either direction. Look at the size of these daily ranges compared to the previous daily volatility. The PSAR is still in support, looking up. So we've got the price ladder at key levels above the daily high, the RL90, the Z1, the hump of the dragon, and the hump of the 10. Price ladder on the way down. Yesterday's low, skin of the dragon, belly of the dragon, plus the Bollinger Band mean. The PSAR, 10-day low, 30-day low, 200-day, belly of the dragon, belly of the 10. So sharp moves in either direction, certainly possible. Oversold sharply on a 3-day, still muddling through 10 to the 90-day look back, still long-term strong. Risk C favoring tentatively swing trades. No overreaction or channeling. The usual suspects on the 10-day max pain: Boeing, 3M, United Health, Cisco. Energy with Schlumberger and Devon. Handful of dojis. Half a dozen auto framers in the Dow 30. United Health, Cisco, Apple, Johnson & Johnson, Boeing, all looking interesting to me. Just one breakout today, Pfizer, which we noted over the weekend. In the weekend report was one of the big strong movers, and that was up 1.5% today, leaving the rest of the Dow behind. ETF 30, just a handful of dojis, no other signals, nothing firing on the auto framer. Some significant breakouts here in the defensive plays in real estate, utilities, gold and silver. It just will not fail. So wheat and precious metals continues to be interesting intraday. We'll take a look at that one here in a minute. Defensive plays, most positive Z stretches, Cisco, American Express, and United Health on the negative Z stretches. Lots of expanded pinch boxes. These are mostly on the defensive plays. Things like Pfizer, gold, silver, treasuries. Travelers and Microsoft continue to be super pinches. Handful of auto framer trades possible here. Cisco, Win, Boeing, all on the short list. Johnson & Johnson as well. Lots of daily squeezes based on today's very compressed price range. So the S&P, emerging markets, the diamonds, even agriculture, all of those suggest a market that's in that compressed range, ready to pop in either direction. So I'm going to be a short-term trader. I like looking at the late winter. American Express, United Health, Dow, Microsoft, especially in its super pinch condition, and Johnson & Johnson. On the ETFs, I'm looking down here at basic materials, all of the U.S. indices here, and even oil, which had a nice move downward today. Pfizer in the big breakout is really standing out in the Dow here. Coke, Procter, Verizon, and Walmart. And then all the defensive plays, look at them all stacked up. You can see the energy sector really getting crushed up in here. Plus some of the speculative indexes like Russell and Brazil, Asia less Japan. Oops. Tight compressed doji. still muddling through a market looking for some kind of sense of direction, but there is a persistent failure to fail further that I'm seeing in the slope stat, and you can see that's starting to curl up at a direction, at a distance more than 1 SD below the long-term average. That's always been an interesting turning point. You see in previous ones where that turning point is hit, there's always been a nice rebound from here. So I'm cautiously optimistic on the upside. The 30 is turned at 2 sigma. The 10 is holding stable. That 90 has actually started to roll up a little bit. This failure to fail further is looking promising. And if it holds here, that's a higher low than the previous triple bottom. So the upside potential is there. Hard to see it, hard to feel it, but it's there nevertheless. Let's see if we can't take a quick look at Wheaton. Yeah, as you can see, the Wheaton just refuses to lose and is making all-time new highs. So everything's looking good for intraday continued trading in that defensive sector. So that's everything from Ken at Tortoise Capital. Keep your risk measured and powder dry. This is just to announce we have a last-minute weekend boot camp workshop looking like it's going to shape up the 11th, 12th, and 13th of October. We had a couple guys from overseas coming in, so we have an opportunity to do a small gathering. If you're interested, send me a note at longke@yahoo.com.